Alright guys, in this video I'll be showing you guys how to use another form of price action strategy, which is going to be the support and resistance. Alright, or you can call it the supply and demand strategy. The last video we talked about how to use trend lines to trade boom and crash 1000. And a disclaimer for you guys, these strategies do not really work well on the boom 500 and the crash 500 and also the 300 series. So if you want to use these strategies, I beseech you or advise you to just stick to the boom 1000 and the crash 1000 market. All right, so in this video we're going to be talking about the support and resistance. So what's the support and what's the resistance? If you've watched most of my previous videos, you would have heard me use some terms like the roof and the ground. All right, the roof and the floor. So the support in this case is the floor, while the resistance is the roof. So the support is basically the lowest that the market has gotten to, and it has gotten there multiple times. All right, so what is that lowest point or the lowest zone, all right, that the market has gotten to and has gotten to multiple times? It could be 2 times, it could be 3 times, it could be 4 times. All right, while the resistance is the um the high or the highest high you could see that the market has gotten to and has gotten to multiple times. All right, so those are the two zones we are going to be talking about, and I'm still going to be using the RSI 10 for my as my chart window. All right, so for those asking for the indicator settings for the RSI, it is just a basic RSI indicator with the period set to 10, and it is applied to close. All right, so let's get on to it. All right, so you can see in the chart right here, this is my chart window. The first thing I want to look for is the lowest low, which is the support level. All right, the lowest low that the market has gotten to and has gotten to multiple times. All right, so what is that low going to be? So I'm not going to be using the line for this strategy. I'm going to be using the rectangle for this strategy, because we are not trying to pinpoint we're not trying to look for a point. All right, we are trying to look for an area. All right, so an area is basically like a zone, a price range that the market, the low where the market has gotten to, and it has been ranging there. All right, so if you look at this chart closely, you are going to see that from this point the market has been at this point, this zone that I have marked with my rectangle. The market has been dancing at that zone. All right, so that zone is going to be a zone for us to watch out if the market falls back to this area. I hope you get what I'm saying. I spotted this zone before the movement of this, so if I didn't do the video then, right, and I didn't take the trade as well, but it would have been a very nice trade if I had taken the trade after seeing the market touch that zone and then bounce on that zone and just shoot upwards. All right, so you can see the zone right here. It is not a line, all right, it is a zone. You can see for some they touch the top of the rectangle, for some they touch the bottom of the rectangle. So this is a support right here, because it is there are no lows below this low that I have marked out. So it is the low that the market has gotten to multiple times, and every time the market has gotten there, it has been rejected and it has gone up. Now what is the resistance? The resistance is the high that the market has gotten to multiple times that I can see. So what are the resistance here? This is the valid resistance I can see for now. This is the valid resistance I can see for now. All right, so this is the highest high that the market has gotten to, and I'm expecting the market to get there and then probably play around at the zone and then fall back down to the support, or just fall back down to give me a nice risk to reward ratio. All right, so as you can see, I have marked out the support here and I have marked out the resistance here. So The roof is always the resistance, the support is always the floor. So I await the market to either jump from the floor to the roof or fall from the roof to the floor. So basically this is the basic concept of support and resistance. Now, this is a concept that must be used with other concepts when you are trading the currency pairs, because they are commonly used there, and it is always manipulative when you use just support and resistance to trade currencies. But for boom and crash, it is different. Boom and crash is an asset that, if you use even the basic or the simplest price action patterns, they are going to give you a better risk to reward compared to when you use them in the currency market. All right, so for me, if I'm going to be using the support and resistance, I always do the multi-time frame analysis. All right, so I mark out the support and the resistance on my 5 minutes, then I move down to the 1 minute and I go down there to check. All right, so you can see right here now, if I saw that the market has gotten to the resistance, but I didn't see a crash, I would have waited for a crash to show that the market has been rejected at the resistance. But there's no crash here, the market just keep going up. So there will be no opportunity for me in the 1 minute time frame. But I'm not going to make that very complex analysis for you right here. So we are just going to stick to the 5 minutes time frame, where we are just going to wait for the market to get to the resistance or get to the support, and then a trade is going to happen. All right, so this is just a basic diagram, or a basic mark out of the support and resistance. So if I should go back in time and look at the chart, let's say I'm currently here, I will be able to mark out my support as this point, and my resistance as this point. Now, if I should extend it, you are going to see that the market came right back at this point, and it went up. Now, how do you take trades based on support and resistance for boom and crash? Now, I'm going to zoom in and I'm going to show you what I do. So this is basically what I do. This is my support. When the market gets to my support, I'm going to wait for a candle to close in the green, to close green. All right, this is for crash 1000. Once the candle closes green, I'm going to take my trade. Now, once I take my trade, I'm going to use this as a marker for my trade. So I'm going to take my trade right here. Now, where is my stop loss going to be? For strategies like this, the stop loss is just going to, you are just going to wait for the market to break below the support. In this point, I have to be watchful of the market all the time. But if I don't want to watch the market all the time, because I can't set my stop loss based on this RSI, because my RSI does not have a corresponding value with the chart, so I can just base my stop loss on the last spike, the last previous spike I can see. So right here now, this is going to be my stop loss. That is the last previous spike I can see. So 6270 is going to be my entry. 6267 is going to be my stop loss. So I can just decide to go for a 1-to-3 or a 1-to-2 risk to reward ratio. So basically that is how to trade the support and resistance. All right, so let me delete this and show you guys again. So you can see here that the market danced around and came back to that same support, level. So I'm going to wait for the close of the candle to be green, and then I'm going to take my trade. So let me just zoom in. That's it. So my entry would be at 6259 at this second green candle right here, and then my stop loss is basically going to be the previous low, and that is going to be at 6256. And then I'm just going to go for a 1-to-2 or a 1-to-3 risk to reward ratio. And now you can see right here, the market got to the support level, but we can see that the market didn't give us a green candle to signify an entry. It didn't give us a green candle to signify an entry, and when it did, we would have entered at this point and then got stopped out at this point, and then would have used another aggressive entry, and the 1-to-3 would have been secured, and then we would have waited again and we would have been able to mark out another simple micro support right here, and then this would have been at a loss for this first trade, but this first trade would have acted as a markup for this second trade and this third trade to be profitable for us. So the first trade failed. We saw the second trade bounce to that same zone of the first failed trade, and then would have taken a trade there and see if we're going to end up in a loss as well. But we ended up profitable, and then we see another trade again occur at that same zone of that micro support, and then we have taken the trade, and that would have been another profitable trade for us. And then we now see the market bounce again as the what at the first trade, the first support we drew. So now we're having two supports to work with. We either work with the first major support or we work with the micro supports right here. So basically that is how to do your analysis. This is basically an analysis I just did. Now for the resistance, I would have marked this point as a resistance as well. Let me see, let me mark that out. Alright, this would have been a resistance for me as well. So this would have been a micro resistance, and I would have had a major resistance, which is this one at the top right here. This is the major resistance because it is the highest high. There are no highs above it. Alright, so this is the major resistance, and then I have the micro resistance inside. So that is the resistance inside a resistance. So you can see right there, once the market goes and bounces on it, once the market touches it, I wait for a spike, and after a spike I will enter the market immediately and wait for another spike to happen. So you can basically use this to catch spikes on crash 1000. Very simple technique to catch spikes on crash 1000. All right, you can see right here the market got there. I wait for the market to get there. Sometimes you don't even have to wait for a spike. You just have to, once you see that the market has gotten into that resistance zone, you just take your trade, and then you just make sure you put an SL to be the high, the previous high of the market. All right, once you put your SL, you just wait for the spike. Once the spike gives you a 1-to-2 or a 1-to-3 risk to reward ratio, then you go out of the market. The same thing happened here, and you can see after the spike, this even had multiple spikes to it, but then you just want to secure a 1-to-2 or a 1-to-3 risk to reward ratio. All right, then you can see for the major support, for the major resistance, we had a trade. So after the sorry for that, after the micro resistance got broken here, which would have ended in a loss for us, then we're just going to wait for the market to get to the major resistance, and when it gets to the major resistance, we are going to take our trade, and then the trade pushes to a support, a new support level that was formed and that we have marked at this point. So you can see basically the market moves the RSI, the 10 RSI makes it easier for us to read this market, to read the support and resistance of this market. So you might want to just try this out on your MT5 and just do this, try them out together with the previous chart patterns we've done, and then you can give me feedback on my Telegram, or you can drop a comment section if you've used this strategy or if you like this strategy on my YouTube channel. So thank you guys for everything you've done. Thank you for the support. Make sure to subscribe to this channel, like and comment and share this video. All right, PrimeFlex is out.